Greetings, Jedi traders. David here of TradingFibs.com to bring you the technical outlook for week 52 starting December 26th, 2016. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market. See what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stops when placing a trade. All right, so we're talking about the technical outlook that's posted here each week at See It Market, followed by the additional post on my website, tradingfibs.com. We'll go ahead and show you that here in a bit. All right, let's take a look at the charts as we roll into week 52. Where are we on the daily gaps? Again, open gaps in the market. Taking a look at the YM, the NQ, and the ES. We also have the crude here. Shooting for that 20,000 mark. That's right, in a low volume micro trending session at week 51 at a turtle's pace. This is, range bound market for the better part. Some people like trading this, but expect more of the same as we roll into next week. Market indices not exactly migrating up to those highs as we have the 20,000 here on the Dow YM. A little bit more distance on the YM to go as we pull back in week 51. But NQ again has that 5K mark on the futures there as well. But when it talks about open gaps, we got a lot of those down below as we see here on the YM all the way down. That's right. If we got... Gonna have to pull this all the way up as 18,921 is our next line, all the way down to 15,924. That's right, with 100% guarantee. I tell you, especially on the indices, and I only speak for the indices, open gaps eventually all get filled. So at some point, the drastic downside move will occur. But at this point, I'm not all about gloom and doom. I'm all about what is current and on the charts in front of us. So let's talk about just the nearest open gaps if we are to retrace it all into the beginning of next week, though I don't expect much volume to move in that way. But hey, you never know. But at least maybe into January 2017 as we start to see the intraday chart shifting downside in the bigger time frames, we might go ahead and close out those gaps. So 2197.25 downside on the ES. We have 48.82.50 here on the NQ. And for those of you crude traders stuck in between two positions here, 46.51 and 55.41, as we'll take a look at the big pick charts here in a moment. All right, so let's jump in. Again, one of the main strategy here that I use intraday in trading in the trading room, as well as posting charts online, is taking a look at what we call Murray levels, Murray math levels. Again, these are modified a little bit, but again, this isn't the core strategy. A core strategy is intraday setups on using range bars and HA bars. So using these as the bigger picture to see where we're at, technical momentum, and then to use the intraday setups, as I just mentioned, on the range chart, those varying amongst indices and commodities. All right, let's take a look. We'll start here with the yearly picture of the NQ. As we could see from oversold back in February as we migrated with obviously pullbacks throughout the year. But again, technical big picture here is that we are at the extremes. You might have thought that somewhere around resistance we would have pulled back, but no, we push and we push, and you know where we're sitting. So here's the big picture as we sit up at these highs. But let's go ahead and take a look at the NQ as we sit on a daily here on the left, the 4-hour chart here in the middle, and on the right, the 60 minutes. You can see 49.41 closing price here on Friday, December 23rd. We have been sitting really on the daily, having a struggle here. Again, this is the daily. We just looked at the yearly picture as we could see where we've already kicked up above the reversal area. So we go down to the daily to see where are we sitting, and you can see 49.61 has really been the line in the sand, and kind of pushing in between these two overbought and reversal levels. Again, resistance down here. So again, I can't with any for assurance tell you where we're going next week. I can only tell you right now we're definitely sitting at the highs. So if we're sitting at the highs, we have to go down to the smaller time frame, which is the 4-hour, which you can see 40, there's that same level, 49.61 on an intraday. So week 51, we really fought that overbought level. So if we are able to break out above that 49.61, then I start to look to 49.80, 81 up here as a possible level And then on an intraday chart, I want to combine that. So here we are, we found support on the 4-hour here at the resistance, and then I go to the hourly and I look at my 5144 chart. So let's just go ahead and expand that for a moment. We could see the NQ this week, again, a resistance up here in the 49.60, 49.65 zone. Price action pulled back, found support at the support levels. You could see how these three charts really work well together. If you can't see the big picture, you're already at the extreme levels. Go down to the lower frame, the lower time frame, and here you have the resistance here, pulled back here to the support. Price action found support. So if we have support on the hourly and we pull back above on the 61.44, we can then see on the higher time frame, yep, we're finding support there. So the probability of continuing upside starting to look better. So the first levels I'll look at here on the hourly would be up here at 49.60. I take a look here. Well, there's that same level here on the 240 minute, the 4-hour chart. And again, if the breakout play occurs, then I know we can push up above this reversal. And at this point, that's where I say on the bigger picture, we start to migrate up to that 5K. All right, so there's your NQ. Current technical momentum is still in an uptrend as the 50 is above the 144, so uptrend pullback on the NQ. Let me go ahead and show you how that looks on an intraday. Here's an example on the Natty Gas here today. Wonderful example of combination of using not only the Murray math levels here for support resistance and any combination of those, but the core chart here, as I mentioned before. So you have your time charts, but on a range chart, what keeps you in trend and upside, any combination of moving averages, whatever your interest is in trending studies, 50 above 144 on a minute chart. You have a T350, that's the Tim Tilson moving average, both an 89 and a 50. And here you see Heikin-Ashi bars, HA bars, keeping you in trend above a T310. So even if whatever market it is, if you're looking at the natural gas, if you're looking at ESYM, whatever it might be, if your uptrend is on the bigger picture, you look for the intraday setups. You can always be ready in both directions, but here you have a great example of what we're looking for on an intraday basis, whether it's to the upside or to the downside. All right, so there's our big picture on the NQ. Boy, we'd love to see that, especially next week would be nice, but again, no guarantees on a low, expecting probably a low volume session. All right, let's take a look at the yearly YM where we sit. Again, similar picture as we back in January kicked off on the oversold level. Again, these charts do change throughout the year. So right now we are at the upper extremes here as we continue to push to that 20K mark. Again, these charts can and will reset themselves as price action either pushes higher or time moves forward. But let's go ahead and take a look at where we are on the YM charts. On the daily, the 4-hour, and the 60-minute. Here we are holding upside as we continue to push towards that 20K, not only on the Dow Index, but also here on the futures. We did find support here at the overbought level as we hold above resistance. So we go down to the hourly chart. We take a look at where we are currently, and we can see 50 above 144. We found support off the oversold here as of this week on Thursday. Price action again inside the 51.44 and holding right now below the value area, which is this range top and range top high and range top low. So really a lot of resistance here. But again, if we can push above 19,893 this week, I could see us migrating back up to this resistance. We break this 932, then I got the green light to give a technical momentum trend that most likely will ring that bell at the top at 20K. So that's where we are sitting down. The case for the downside of price action loses support here. Then we got to start looking down towards 19,814. And then we take a look at the 4-hour chart and see where does that line up. Well, that would obviously still be within this zone of overbought. So then I'll look down to the resistance here around 19,766 as the first major level of support if we are to even push it down there next week. All right, let's take a look at the yearly ES. As the ES, as I have two multiple time frames on here back from January. As you can see, we've already pushed up above the reversal here. So we throw on a shorter time frame to a yearly picture. As we can see, we're sitting up here at the resistance in this zone 2250, 2281. Any move downside, we'll take a look to 2156 if price action does move down. But as far as the ES, both on a daily, as I just showed you daily, we've already breached that reversal level there at 2234. So I look down again. Let's pull up that yearly as we see price action 2156 on the bigger time frame on a yearly. But just taking a look at the daily, 4 hour and 60 minutes on the ES, and price action pulled back in anyway next week. We'll take a look at support first at obviously the 2234, but I go to my 4 hour chart. As we've seen this week, we held in this resistance zone of 2250 to 2257. So I go to the 60-minute chart and see where I am again, really holding inside this value as we found some support here down near the stall week reversal. We never got down near support. So if price action is to come down in any way through this value area, the first levels I'll look to is the 2250, 2248, as low as 2244. If any move to the upside here, I would look again to the resistance up here, 2265 to 2267, and anything up above as well as a form of resistance. So right now inside value area. So there you are on an hourly. As you can see, price action can shift more rapidly during the week as long as that hourly is starting to match up with the bigger picture. So I look here, I see 2265 is upper resistance. I can see that overbought. So there is my most likely upper levels there on the ES for next week. Let's take a quick jump into, we'll take a look at crude here. Crude again, big picture as crude has made its way up to these upper levels, 54.69. We saw on the daily gaps, we have a daily gap up here of 55.41 on crude. If we were to migrate up there on the crude, again, we'll push up above these reversal levels. Let's take a look at the daily and the 4 hour and the 60 minutes. We can see we're sitting here at that overbought. There's that open gap up there, 55.41. As we see as well on the resistance on the 4 hour chart. So I got to drop down to the crude, currently in an uptrend now, 50 above 144, back into value area. So the first levels I'll look up here is 53.91. If I can break above that 54.10, that would obviously push me up to these levels on the 4 hour chart. And then the most likely probability is we go ring the bell up there on the open gap. The case for the downside, look for support again here at 52.34 and down to 51.95, 51.17 leading into next week. And finally here, two more. Let's take a look at the GC. We know the gold has been coming down, found resistance on the bigger picture here around July, has been pulling back, retest, and now down at support. Good news here is that here in December, late December, we're finding and testing those lower levels of gold. So there's our yearly picture. Let's take a look at the both daily, 4 hour, and GC. We know that to be under the 5200. We lost here at the value area, and there's that support down here at 1125. We look to the 4 hour here, we're holding, and the hourly, again, not as great, 50 below 144 on the EMA cloud here as we continue to find resistance here. But again, we're still holding in value on the weekly picture here on an intraday hourly chart. Anything to the downside, look to 1125 down here. If we get back down 1123, as we just saw here on the bigger picture on the daily as well. All right, let's wrap it up here. Last one. Let's take a look at the 6E. We have the 6E euro here, finding again bigger picture on the daily after resistance up here, holding below the 5200, lost through the value area here, and we're holding inside these two zones here. Again, anything to the downside of the euro, look to the lower levels here around 1.02, 1.01. And then as you match it up here with the 4 hour chart, we are there already at this point in support. So any move back to the upside might retest that 50 EMA or 50 period moving average on a daily and back up into the range. So again, we're looking back up at 1.08, 1.07, which would lead us up on the 4 hour chart. But again, we look towards the hourly chart as we hit that this week right off the oversold. Price action back up above the 51.44, at least a little bit back into range here. But again, I got to go with the euro still to the downside as the 50 holds below the 144, even on an hourly chart. All right, that is a insight into the technical momentum for the indices and key commodities for week 52 as we head into next week economics wise. Again, Monday we have a holiday session. Tuesday, a couple of yellow star events, but nothing really red star until the end of the week, the 29th. So expecting again low volume during the week. Hey guys, feel free to stop by tradingfibs.com, my website, or any of my social media outlets to obtain more information. My trading mantra: one simple strategy, any market, any chart, any time frame will keep you disciplined. Hey, you can find me every day on Twitter at TradingFibs, and as always, I really do leave the crystal ball to the experts. I only watch what's in front of me and on my charts, and as always, I leave my bias at the door when trading. Guys, make sure you check out the midweek technical outlook here, midweek 51. As you'll see, I'll update these charts during the week, including the current price and where we sit inside these, whether value area or top of zone or low of zone, as we see here on the gold. And also check out my intraday post, as the charts will throughout the week change according to market price action. Hey guys, as stated last week, consolidation in the indices may be just what the market needs at this point. So, hey, be ready in both directions, and that might be your best offense. Intraday charts may surely have a setup, hey guys, in the first 2.5 hours of market US Open. Otherwise, simply turn your attention to other charts if it just is not there. I also have an option in week 52 to sit out, get outside, enjoy the outside, and come back in 2017. Hey guys, we'll be back next week. Make sure you check out those charts next week here at See It Market article and at tradingfibs.com. Hey guys, have yourself a blue zone week. For those of you interested in joining us in our community of like-minded traders seeking those highest probability setups, feel free to email me, or you may join us on any Thursday or Friday to view the live chart setups as they happen in the trading day. Hey guys, have yourselves a blue zone weekend. Great holiday wherever you may be. Good day, good night, and good trading to you.